Perfect. Thanks.
The bears did 10 points 3 tick, so they could continue, and bulls now did only 10 points, so 9 plus 3 tick, so not enough for bulls to continue. That strong bar closed 4 points. For now, this is wedge. It's 1, 2, and now 3. So on lower time frame, it could be some double top and then pull back. This bar is confusing because it was strong entry bar for bears. Bulls making 1-1 from here. They make it here. They make it, and here they make it again. So they make it here. They managed to re-enter, and the next bars they reached as well, as I remember. Yeah, here. Still possible wedge, but at this point it feels like market now transition to something else. Now there is dropped sellers here. They did not reach target, and here they did not reach target as well. Those who took profit at 1-1, 2-1 entered again and managed to take 1-1 and 2-1 again here. So they can try to re-enter for the third time. Full still only 9 points. They need to go a little bit higher. Still holding EMA. They are failing to close above. But now you can consecutive bars. If next bar is bull, then this leg will likely get a second leg up. So you leg 1, this will be leg 2. Now this is third leg, outside bar. Bulls did 12 points, the 15 points here, and 20 will be very close to their target, which will less likely to reach. The bars are overlapping here. This is first close above the EMA. This is outside bar, and this is what you were asking from yesterday about the. So, for example, the inside that was good entry from the inside bar. I think there were more examples. Yeah, but so the inside bar are good to enter because you have a limited risk. You know where your stop is below that inside bar, because those who entering here, if it's reversing, they will exit here and reverse their long to short. But for outside bar like this is outside bar. it's not a good entry above that bar. It's not a good long, it's not a good short because it's a strong bull bar. So it's for now it's more likely a drop here. Strong bar, the last high is still holding. This is not a major high. The major high is here. But once it makes the new high, then this bear leg will cancel out. This is top of the range. So sellers are here likely. Possible 2 legs here for bulls. With that doji to be a stop, to be a pause. There is bar 40, so it can be possible. So this time window can be possible reversal, midday reversal. But for now, until bulls manage to get their swing, this is top of the range, this is bottom of the range. 3 consecutive bull bars in micro channel for 3 bars, closing inside the previous, making higher highs. The dropped buyers managed to exit, and now it constantly coming back. That means they are not dropped and not exiting, so this is a sign of strength for bulls. And now this last bar managed to close above that.
We have a kind of double top there too.
Yeah. So top of the range, and for now, the sellers higher likely, but probably it will sweep the high of that bear leg. So this is why those outside bars are dangerous. That was a trap. Now it's strong reversal, but bars are overlapping. So this is trending range, and this is basically bottom of the channel.
And bulls reach 1-1 from that lower. 10 points or 15 points. 15 points there.
Yeah. Yeah, the 15 points and 2-1 of that entry bar.
Yes. And maybe a second leg too. No, where is the? If you measure the first, that one. If you measure that one.
Like 1, like 2.
Exactly.
So
15.
15. Yeah. Yeah, so for now that bear leg is cancelled out.
So bulls are the ones that they are making money.
Trending range, the both are making money. The bears are making money. That was entry bar. They make 2-1.
No, I mean in the last move.
Yeah, from the bottom of the range to top of the range.
Yes.
Yeah. Yeah. Right now this is higher probability short. It's still some type of wedge with very overlapping bar, or maybe nested wedge, like this big wedge, and
Yes.
then there is
Yes.
1, 2, 3.
Yes. In a smaller time frame. Yes.
Good entry bar, but very overlapping. Still reasonable entry below.
With his top order, right?
Yeah, there will be buyers at that bar. Took 2-1, 1-1. They will try to enter again. The bulls finished their 2 legs, and now there's a wedge. top of the range. They managed to close the bar above EMA and did not manage to close 2 consecutive bars.
The reason to use stop orders and limit orders is just because if you put a for example, for a short, if you put it, or let me think it, if you put a stop order above, it's going to be executed at the actual price, right? Instead, you have to use a limit.
And
That's the reason.
By default setting, it will be as the market order. Once it reaches the stop order, it will execute in market buy or sell. But you can also set it up to be a limit order.
Yes.
So it could reach your stop, and then it will replace your stop level with limit order.
But what is Albrook's idea of using one or the other? Because you can put a limit there too if you want. Below that week, you can put a limit there, and
no, you
but
you cannot. If you want to sell below that bar, you have to use stop order. If you put here sell limit order,
it's going to be executed.
Yeah, it will be executed because the price currently
Oh,
is higher.
it's above. Okay. So
Yeah.
that's the reason why to use one or the other.
Yeah, it's opposite of the limit order.
Okay.
Because you want.
Right, because you are shorting. In case you want too long, yes, you can put a limit there.
Yeah, limit buy here, but it will be like fading this bar.
Yes. I mean, in the way that it works.
Yeah, because you want to enter
Short.
short, not because of that bar, but because of that bar plus it triggering one tick lower. You want to enter on confirmation of that it will trigger your entry.
And when Albrook talks about stop order, that when price, in this case, for example, that he wants to go short, right? His order is executed at, I mean, the stop order is executed as a market or as a limit?
As a market.
Okay.
Yeah.
Okay. So
because when you're entering with stop order, you are betting that it is trend. Once you entering below that bar, one tick below, your bet is that from here, once it trigger, it basically continue go down. And if your stop is not executed by market, but
maybe
the limit order
is not executed. Okay.
Yeah, you will always be left behind.
Perfect.
Now it's still in a micro channel. There is break even for those bulls who will scaling in. They will try to exit here. Other will try to exit its garage here. Reasonable entry on stop, and also reasonable entry with the limit order, given how tight the bars are. They are all overlapping each other. That will be hard to enter with Romine without too far. This is still low one. it will be much better to have the low two entry uh, in trending ranges, and overall it's much more safe to entering with low two, high two.
So far, we have a new formation of a new bull channel, if you want,
Uh,
using that green line you put it. Yes, because you have
like
no the bigger one, the one
that
exactly
one.
that one. Yes, that one. Because you have another point before that one, the candle 19, if you want. So 19, the high of 19, and the high of the 34, or the high of the last one, you have a channel there. That one or the other one. Yes. And then we can take it as a bear flag. If you zoom out.
Yeah. Uh, the the main idea is that right now is that it has big gap down and parabolic move down, so that was climactic, and there is much more probability that it will stay in a trending range until the end of the day, rather than uh, continue that parabolic move down. Because this is what usually happens. It's for the first 1 2 hour, uh, it has a strong move down, and after the first or second hour, it transition into the trending range.
Okay. It's not a high probability to see a second leg down or up
Yeah,
in case of a bull in the second half of the day.
yeah, it's a low probability.
Okay.
Yeah, I think we can watch it out here. So gap down, gap from here. So this the most common outcomes when you have gap down, and so here we we have something probably like that, the gap down wedge, and there was
Ah,
reversal, but we have
because
training
of
range.
this we had a okay. I got you. We had a big gap at the beginning of the day. Okay,
Yeah,
I forgot that.
we have a big gap down, and also we have the parabolic wedge. So the my idea is something like that. When you have the parabolic move, then it it reduce the chances for continuation. It instead it will be either the in range or in reversal. For strong trend, you need something like small pullback bull trend when it's slowly moving higher or something like that.
And there is no day so far in these slides with a big gap down and a continuation.
So again,
that I don't see a slide with a big gap down and a continuation to the downside. I mean, big gap down, a leg down. Ah, there. Okay.
there. Yeah, I wanted you see
The first. I mean, the first one. The first. That one. That one.
it's very different to what we have. If you
Yes, 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 yes. Because we don't have that initial leg down there.
Yeah, so you have only 20% chance that it will be in a bear trend for the entire day, and especially given that you have the parabolic move, so you have 60% of time become a trending range day. So it's more likely that it will in range. When it does, 20% of chance late trend reversal up or trend resumption down. So you have only 20% chance that from here it will continue go lower. Yeah, and basically you have now 80% chance that it will stay here for the entire day.
So if I subscribe to for 2 months to the BPA chat, I will have a lifetime subscription to this, or I have to
No,
continue being
you
subscribed.
no you need to buy this. This is the video course, so this one. And once you have this, then you can buy encyclopedia.
Are you sure?
Yes,
Okay.
it's nothing to do with that Brooks price action. It's different website only for live streams.
No, because I saw something that Alberts posted about those who bought the course and those who bought the encyclopedia. I will check it. Don't worry,
Yeah, but
and I will tell you.
I'm sure you need to have this course, and then you will be able to for additional
To-
price to buy the encyclopedia.
Okay, but first you have to buy the course. Okay,
Yeah, the course and wait 60 days in so you cannot refund your video course.
okay, and then you have access lifetime to this. Don't have to continue pay anything to have access.
No, this is yeah for lifetime.
Okay, and the actualization too,
What?
because they make like an actualization every day, an
Uh,
update.
yeah,
You
here.
you show me something that they add new slides every day.
Yeah, so that one this is for 10th of November. Yeah,
Okay,
so this is Friday.
and you have access to this, and you are not paying now.
Yeah, it's inside the encyclopedia.
Okay, perfect, perfect. Thank you. This has a lot of value. I
Yeah,
told
it's good
you
and
my idea with this. Yes, I told you.
yeah, and there's not only the like the examples of the how the day will end up, but also there's like small lessons on, for example, how to trade, the trade entry and management, and there is some advices, some examples, not for the specific day, but just how to enter, where to put your stops, where are the reasonable centers, where are not.
As an slide, or this is a video?
No, no, when I'm showing you right now
Okay.
here. So, for example,
I
here
see.
it's
I see.
explaining the always in concept, showing the examples, uh, showing what to pay attention to, what's are important, what's not.
Oh man, this is a lot of work. These guys would be making a lot of money.
So when big down, 60% of chance of swing down in first hour. So when you have the big gap down, you have a 60% chance to get a swing trade in the first hour. 80% chance of a pullback in the first or second hour. So this is basically what happened on, on the
There.
open here. You had a 60% chance that you will have a swing short, and there was 85% chance that in the first hour it will stop trending and change its state, like as it did here at bar 24. Yeah, and it's funny that before that I I was always when I was sowing something strong like that, I was fully
Sure.
expecting it to continue for the
Yes.
for the rest of the day, even though I have experience and I like watching the charts for the more than 1 year every day, and I never notice that it will when it have the parabolic move, it significantly reduce the probability for lower prices.
Because it is counterintuitive.
Mhm.
I mean, it's going down.
Yeah, yeah. It's just funny that that me was not able to like notice that. Maybe it's okay if you knew and you uh, expecting something like that, but after you saw that hundreds times and you still expecting that.
Yeah, man, this guy had 30 years, not 1 year, doing that.
Mhm.
And I think that is not so obvious, but I got you. And it still have some probability to continue going down, right?
Yeah,
Uh,
20, yeah,
lower, but
yeah. It can stay in a trend. It can do lower lows, but they should fail and reverse. It can try again lower low, but it should fail again. Only 20% chance that the new low, the breakout will be successful and continuation for downtrend.
okay.
I'm thinking it's will be probably hard to enter short here, where the rapid buyers are more easy to enter on break even for the bulls, and the easiest entry will be on stop below the bar because they are overlapping. There is high probability that it will reach that break even level, but because the bulls finished,
That is Romain, right?
yeah,
Okay.
yeah, but I'm not sure he will consider this trade because it's top of the trading range, but this is are two overlapping. It
Okay.
doesn't look safe. To enter, you want something like good bars and uh, like they are still overlapped because every bar you have a deep pullback almost to the previous low bar, then again new bar and deep pullback. Even here you have a deep pullback. Yeah, you
Yeah,
better.
you need something more like that's the 34, 35, and 36, right?
Yeah, something like that.
Yes, I understand.
Yeah, that
Yes.
was look good because yeah, you want strong trend move and then pull back to enter for second leg minimum
And
high. Then
what I also understand is that what he looks for is more for a breakout too. It's like the first leg he takes. Let's say he used this as a wedge. He say okay 1 2 3. He sees a breakout to the upside. Forget about the beginning of the day. But when you have a kind of wedge, he waits till he see a breakout. He takes those 2 3 candles of the breakout, and then he measure from that. So it's like he told me the other day in the in
yeah,
the monthly meeting.
yeah you you want to bull to finish their second leg and basically fading that second leg, but not fading, waiting for bears to show up after that, after bulls finished 2 legs, and now bears can have higher chances to get their second leg, and now you enter with them. So you
Yeah,
want to you want to enter once bulls finished uh, their trade, and once bears
exactly,
started their trade.
exactly.
And it could be 2 legs. They can try it for the third leg, then even higher chances. But you want to
But
see
when something finish, I mean,
when they finished there, or when,
exactly.
or also probably when they are dropped, or like here. But I'm struggling to understand when that drop happened, like here, because this is bear drop. This is strong leg, and it was very likely to them to get second leg down, which was supposed to happen here, and it failed. Uh, and this is very often happened. I noticing this very almost not every day, but almost every week. I see something like that when there is strong leg down, and this leg look even stronger than this pull bar, and it's not overlapping. But then at this point they failed, and it became a trap.
But maybe because you are now we have too much lines. But if you hide drawings, everything, uh, maybe like this, you can we can realize that we have a trending range, and that is why we don't should expect a second leg, maybe because it's ranging, and that is almost from top of the range to the bottom of the range. So
Yeah. In in
maybe,
in training ranges, it's also very common to have the 2 legs wedges of.
yeah, but in this case, the leg goes from what I mean is in this case, the leg goes from top to the bottom of the range already. You know what I mean?
For example, here, the show. So this is in, or maybe it's bad example because it's not that. It's more
No, but I
widespread.
believe that I know what you say. What you say and what I am saying. In this case, for example, I wouldn't expect a second leg from the bar 26 to 32. You have one leg, right? 26 to 32 or 33. You have
Mm.
one leg there.
Yeah, you
But
have one leg, but you also had that. That was the
yes,
minimum. They got the
but
minimum.
that is what I am saying. That imagine that this is a trending range, and I wouldn't count that down move as one leg because it almost took the complete range.
Yeah, for a second leg, you want to have something equal, so you have the about the same
Exactly,
same move
exactly.
to confirm that this is the actually the second leg.
That is what I am saying. Yes, yes.
Yeah,
But I know what you mean too. Is that in the second case you would expect,
yeah. It's
for example, here there you
in
have one 51, 51 to the low of the 52.
yeah. It's look like 2 legs. Yeah,
Exactly. You have all the time that, and
yeah,
you are
yeah. And
in
they,
a trending range.
yeah. For example, here it looked like it has the for bears that was leg, that was pause, so it's bad 2 legs, but it's still something like 2 legs. This leg up was the result of that first leg for bulls. Then uh, their bears have a wedge. Then bulls have 2 legs pullback. Then bears get again wedge pullback, and then
That
again bull.
video, I think that you or we see it together. I don't know, but I posted on Discord the other day. That chef told me good video. You already saw it,
Hmm.
uh, where Ali talks about that, and he see two legs every time. every time, every time, every time. Uh, above that one.
Yeah,
You could
yeah,
almost get out
it
break.
talk about the legs. Mhm.
Exactly. In this one, he says what you are saying.
Yeah.
So okay, where we are select show everything.
Since this is the wedge and strong bear bar, 2-bar reversal, and bears managed to close 6 points, I think it's even reasonable to enter with the stop order.
I agree.
Sell stop. Basically risking that bar. Probably isn't the stops that I'm using are not the best, because for now most of my stops has to be probably that high, because this is the last major high.
Mm-hmm.
Also, there was other trades which were, for example, that buy attempt. So that was the first at 1-to-1, and then there was big pullback that basically stopped me out in a trading range at the bottom of the range, and then reverse. So that was a bad stop. And also here, shorting that one tick below that bar, the stop was above that second leg, but probably the better short was better stop was above that last high or above the last major high, because this is training range and this is top of the range. You have a stop at your top of the range. In training ranges, the stops need to be your risk need to be higher than your profit.
Higher or one to one?
Usually higher, because in trending ranges you want your stop to be about the double size of that trending range. Basically, your stop are betting that 80% of chance to break out the range will fail and come back both sides. So your stop need to be at 1-to-1 of that trending range, which is, for example, somewhere here, and you betting that once it break out, it will fail because there's 80% chance that it will stay in training range, yeah, and your stop will not be hit.
Perfect. So it's a 1-2 instead of a 2-1.
Yeah, 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 and it's the stop 1-to-2, yeah, but your profit even smaller, because if you enter in here and you want to take profit at the bottom of the range, it's like 3-to-1 risk reward.
1-3.
Yeah.
No, risk reward 3-1. You're right.
So the bulls had 3 consecutive bars, but it was dodgy. 2 bars were dodgy, only 1 strong bar, and it's reversed. That was outside bar, so it's drop. Now could be possible trap for bears because it's overlapping. Most likely it will reach the break even for bears, maybe even let them to scratch the trade. Or probably I will not enter on stop. I will better try to enter on their break even, and if now it will continue to go lower, I will try to enter with the Romine setup. The next bar.
Woo!
This is again outside bar. Now there's dropped buyers. So there were dropped sellers. Now again dropped buyers. This is now, so this high one, high two, basically high three, and this will be high four. They managed to close again above the EMA. If the next bar will be bull bar, then it will likely continue go higher. For now, it's making higher higher lows and higher highs because it's making now the new high of that.
Another mistake we made was that we put it a stop loss inside the channel.
Yeah. Now it have the failed. It's still not triggered, but it has the failed wedge. So if it confirms, then the merchant move of that failed wedge will be here, and the that leg bull's target is here. Basically, that failed wedge will be the measured move of that trading range, somewhere around here.
Can you give me 1 minute, please?
Mhm.
Thank you. Bueno, bueno, dale, 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 gracias. Dale, beso. Chao, chao. Sorry, and thank you.
Mhm.
Here, back. So you move. You close the. No, what did you do?
No, nothing. Yeah, now I'm moving my stop to trying to maybe not scratch, but to break even where the break even bulls are, bears. So those who trapped here, adding here, they will try to exit on a pullback. There is macro double top right now. If next bar will be bull, then
But
the
that is your take profit.
this one,
Yes.
yeah. So my stop is about that bear bar.
Okay. Okay. Okay.
Yeah, and I'm trying to exit because there is now trapped sellers. That was low one of the wedge. If the next bar will be bear, then it will be a better entry. But for now, if I give a chance to exit, better to exit and wait for more. This is the high four for the bulls, and but Albrooks don't like to count more than high four or low four because that means it's not a wedge anymore. It's just uh, just a bull channel then. Still top of the range. 15 points. Bull need to close above that, free tick higher.
Double top there. Micro double top.
Yeah, micro double top. Still higher high double top with that. And maybe could be some wedge with that. So free tests. Overlapping bar, trending range environment. Once that channel started at the end of the third hour, bulls were making money, entering on stop, and bears were not able to. So the bulls, those who were fading the bear bar and taking profit above, they were successfully doing this.
Mm.
Bar 48 is the 4-hour bar. It can start finish the buying program that started here, and now it can maybe start the selling program to the bottom of trading range. Strong breakout. It did not let to break even those draft buyers. Now 2 consecutive bars closing above the EMA. Since this is the trending range, this is a good fade, betting that the breakout will fail. Now they closed 17 points, so they can try to go for 20 points here.
The gold number.
The 20 points.
The 1,000, yeah.
Yeah, so those who taking swing trades long from here, they will take profit at 1,000.
Yes. I like that.
I'm thinking how this trade can be sold, but
I would wait for a fail breakout. See if it's a bull bar that reach that level. I wouldn't do anything yet because maybe it's a failed breakout and then goes inside the channel again.
It will be more likely to fail breakout.
Okay. So, but in case you have a bigger, okay, to the left, you have another. uh-huh.
So the doji is the minimum for the bulls. They basically reached already 20 points, missed by 3 tick. I'll try to fade this bull bar, betting that they will not reach the swing trade. At 20 points, there should be sellers. It's trending range, breakout, weak follow through.
You put it a buy order there?
The seller order.
Okay.
So the idea is that I think there is 40% chance that it will reach the 1-to-1.
Yeah, and that in that case you are still in the game. Yes.
Yeah, for those who are entering on stop order.
Yes.
And there is 60% chance that it will sweep the low of that bar.
Okay, that would be the fail breakout, right?
No, for successful breakout, it need to have at least.
No, the failed one. It's a 60% chance.
Yeah, it already failed because it has no continuation, but it's not strong failure, and it's
Perfect.
minimum what bulls could get the dojo. So it's like it's not good for bears and not good for bulls.
Okay. Next candle. Perfect.
So it was high probability to sweep that bar. That was the high 4. So now if they will get the high 5 entry, that will mean this is the continuation of the channel. So they shouldn't get that. There is EMA gap setup. Do you heard about that?
Yes.
Yeah. So for the last 20 bars, this is first time it managed to close above the EMA. That mean now it so it's the sign of strength for the bulls, and that mean that strong bear trend will showing buying pressure where the buyers managed to close above the EMA. So now the expectation is that the market will test the last extreme, which is the last low, and here should be buyers who will try to reverse market. So
If I remember well, the first gap, up or down, it leads to a continuation to the other side, right? So in this case, the first gap leads to a continuation to the downside. That is okay. When you see this, the higher probability is to continue down.
Yeah, not to continue down, but to test the last extreme, which is the
Okay.
last low.
Before
So
continue up. Okay.
yeah, because this is sign of strength, and this is something that bears should not to allow bulls to do. Now this
Okay.
is sign of strength, and because of that, you want to consider taking profits here and not betting that it will continue go lower.
Beautiful. Beautiful.
Again, can't see the setup to enter for shorts. The top of the range. Still likely for bears to get a new low before bulls continue. They reached the 20 points, so that in trending ranges, especially those 10 points, 20 points are important because now they are not taking swing trades, but instead they are taking scalps, and they are especially focused to take the trades as soon as take the profit as soon as possible. So the closest best profit taking was the 20 points, and they are taking here. They are not expecting 40 points, and for same for 10 points on that trending range. So there was pullback for 11 points, 7 points, then 9 points.
Maybe they
15,
front run
15.
that 20 points there.
What?
Maybe they front run the 20 points there.
Yeah, there is always someone who taking profits a bit earlier.
Exactly.
When Rose talking about those points, she always if it's 10 points, she will take profits at 9.25, 9.50, not at 10 exactly. If it's 15 points, she will look at around 14 points to take profit.
Okay.
Yeah,
makes sense.
and for 20, she will take at around 90 something.
And when you look at, I remember this from the volume profile. When you see the profile or the order flow, when you see the order flow there, you see a lot of orders that are from running support and resistance levels. And in this case, that 20 points that you mentioned is a kind of.
Mm-hmm. Yeah, so the bulls reached the 20 points. Bears still not managed to close 6 points. Top of the range, but a bit hard to consider a short. At that high, there is more sellers than buyers because this is paid buy, and below that, there is not that much sellers, but also not no buyers because it's a bear bar. There's chances that the 4 hour now will switch
Yes.
Yeah, so
Yes.
that was the third hour which triggered that buying program, and now that program reached the 20 points. Now maybe this program will switch to a selling program to get 10 or 20 points other side.
To the other side. Yes.
Strong bar did not manage to close below the previous bar, but managed to close on it low. There were the trap buyers who managed to exit at break even.
That 50% was from where?
That was from close of that bull bar
Yes.
to close of that bear bar.
Ah, okay.
So you can imagine that the buyers were buying at the bottom, expecting maybe some swing trades. Maybe that was their target, and they were holding, and at some point they are disappointed, maybe because it reached 20 points and now there is selling pressure, or maybe they saw that this is breakout and it should continue, but they were disappointed. They are taking their last by the close bar. Yeah, so once this bar closed, this like the by the market once the bar closed. So this bar by the close, and their next disappointed bar, which is bear bar. So they are buying what even more at the close of that bar in order to exit at break even. And by
In
that,
the third candle, yeah, the 52,
yeah,
51, they exit there. Okay.
yeah, and that way, this is similar of if they exit at top of that bar, basically at the uh, at the at the top of that reversal. Yeah.
Yeah, because they scale in the 50, so in the bar number 50, so they have now the break even point at that 50% level. So in candle 51, when they reach that level, they got out there.
Mm-hmm. Yeah.
Okay,
That
perfect.
yeah. That basically allow them to exit or taking profits at the market top, exactly at the market top or at the market bottom by doing that.
Man, you need a second brain to do that on real time.
Yeah, that's why it's Algos who's doing that. Now they closed 8 points, so they can go for minimum 10. Still trending range overlapping, but now these two bear bars, the bears can get 2 legs. They are still not making money. Bears. Now I was watching that, so that once that move started, those who were fading this bull bar, they failed. Those who were fading this bull bar, they managed to take profit here. Those who fade this, they did not manage to enter, but those who enter on close managed to get. For that one, probably no one for that because it did not trigger lower low, but maybe someone exited the close of open of that bar or at its low, not one tick lower. And those who were fading this bar, will they manage to take profit because they are still in trade if they sold one tick above that bar, their stop somewhere around here of the 1 to 1 of that bar. because for now bears still not making money the same way they failed here, here, and here. So there's still probability for them to fail, but this time it's different because now it's 2 consecutive bars, or if you consider this doji, now 3 consecutive bars, where the other times they only had 1 bar constantly.
So would you put a sell order there?
It's a good sell order because now it does not look that overlapping as it was overlapping here. But bulls still not making money, so it's a bit dangerous because of that. This is strong selling from the 20 points that increase the chance for bears. I mean, there is strong profit taking. There was the disappointed buyers who managed to exit. Now the price should not come back to that break-even level, and the trap pulls continue go lower. Right now there is more sellers below that bar and above that bar, and bears they can get second leg down. Top of the range, not the best stop because it's trending range and it likely can be stop that it can hit the stop. It closed below the EMA. If the next bar is bear bar and managed to close below EMA, that will be sign of strength, and now will be 3 consecutive bear bars. So that bull bar is not strong. For example, compared to here.
Yes.
Yeah, so they were trapped, and now this bar is not as strong as this bear bar. So,
But we need a little bit more.
but the bear is still not making money. They're 1-to-1 here. Now here's some other traders who fading this bear bar below that, and this bear bar below that. They are betting that there's higher chances that it will reach that high before 1-to-1 because it's in the channel and it's now testing the bottom of the channel. So if it managed to get on high of that bar, there will be some sellers who buy here and selling above, taking 1-to-1. But if it come back, then it letting to break even again, and probably could get even to exit for that trapped buyers. Their 1-to-1 is here, so there can be some profit taking. This high 1, high 2, 3, 4, this is high 5. This bear leg still can get second leg down, so I think it's all right to hold it until bears get the second leg. But also bears reached 10 points, 975. So it could be the profit taking. Yeah, I'm not sure. The bulls are making money 1-to-1 here. Those who entering here, every previous enter they were making money, and because of that, it's there's higher chances that they will continue to make money.
If you trace a linear regression, maybe from that low, the 37. No, that should be from 37. Yeah, from there to there. What do you have there? That's the channel you were looking for.
Yeah, I'm not sure about the. It would be easier to enter if bears had three bars, not only two, but they still get to. That bar was the strongest bar from the bears, but not stronger than this bull bar.
I believe that a good methodology is to, if not sure, not take it. But
So for bears that was low 1, low 2, low 3. Now this is low 4. Basically the last chance for bears.
because if let think it like this, let's say that it goes up and then continue lower to test the lows as the high probability we were talking about, we can enter along from them from there, sorry, uh, because we are not expecting to continue to the downside from the lower of that channel, right? So maybe you can close that, remove that entry, and wait to see what happened after, because we are not sure now. We don't have enough information.
For now, expecting the second leg down after
Exactly,
strong leg.
but we said that we would like to see 3 strong candles. uh, in case that this continue going higher and stop us out, where do you have the the 1-to-1 is below our take profit? Okay, I mean the 1-to-1 from that candle, because I see it's not clear, because you have following, you have bull candles follow through big one. The 47 is bigger than the 45. It's true that the 48 is, but it closes at the high, so maybe you have a second leg from that move for the 47 and 48.
Yeah, the higher probability will be, so now there is the pullback. If bears will get the next, if it drop, the bears get a bear bar. That low, it will be low 2, so this is low 1, and this will be low 2,
Yes,
which is double top. at the top of the range, that will be the higher probability, but the entry will be lower.
Lower, yeah, but it's higher probability, right?
Mhm. Yes. So let's see how the next bar is the will
Yes, but
will those who fading those bear
exactly,
bars manage to make money, and will those who
exactly.
entering on stop manage to make money? So they need to close now 6 points, which is here, to continue higher, and this is possible profit taking for bears at 10 points. Yeah, so now they are trapped, and now it's hard to enter because it's a second leg. Did not reach
Exactly.
uh,
I was
the
going to say that. Yes.
Romine level. Those who
Anyway,
were fading
yes.
uh, this stop entry uh, were right, so they trapped those buyers. Now there's buyers trapped here. They managed to exit here, and now they are trapped here. It's strong bar closed. It closed lower than 10 points, 11 points. So they will go for 15, which is here. Still did not reach the target 1-1, but likely will reach it. Strong bear bar, and the body is stronger than the bull's body.
What about I see this as yeah, exactly that. Exactly that. I like it. Let's try with that one.
The ultimate target is the low extreme after the gap bar.
Love it, love it, love it, love it. And you have a lot of a cluster of 300s there.
Of here. Yeah,
Yes,
yeah, but they are failed because
yes.
uh, they were stopped out here. Uh, this is from Albrook's book, Some Levels to Consider. Maybe it's not that relevant on trending range, but on a trend days, for example, if it was a strong trend and the bears were trying to short here, and they have failed, those entries levels are now important targets, yeah, to consider, because they will so they will try to exit it at break even where
Mm.
they entered last time. Strong bar closed below the previous low, make lower low, but did not manage to close below that low. So those who were fading this strong bar, they were still in short because it did not reach their stop, and now they took profit, uh, basically 1-1 of that bar. That's the reason why there's buying pressure.
Also, those who long from there, not only the ones that faded that, but also the ones that on
Yeah, but
47. Yes, exactly.
yeah, but those who long, those who buy here, they are um, selling here, so that mean it should
No,
go
no, I mean
lower.
the ones who buy in the low of the 47 and made the move to the upside. You know what I mean? There, from there, you have people that were longing and made that strong bull bar. I am correct. People who go there in the low of the 70 and the 47.
46.
No, 47, the low, the ones that we were measuring from there. You have people that bought there in the low of the 47.
Ye- Yeah, but they were not able to identify that low after the candle closed. Uh, I'm watching at it a little bit different. For example, those who were buying, they were buying here, fading this bar, for example. Uh, and for example, I'm thinking that some other traders they were fading here and, for example, taking profit at high of that bear bar. Other will enter on stop about that bar and to buy, and their stop will be, for example, below that bar, which triggers
Yes,
here.
that too. Yes, that too.
Yeah, but that was the minority because that was a bad buy at the top of the range. And because of that, once it reached that low and triggered their stop, that means they are selling now. Yeah, so increasing the selling pressure, but there is no continuation for selling pressure. I mean, there is no that much
But just
stops
just
of the
just
trade.
to know if it makes sense, when we measure from the, let's say we take that candle and we measure the 10 points from there, from the low of the 47. Let's say that we measure from there to the exactly. You're assuming that you have people that enter there long, I mean in the low of that candle, because that is why you are measuring the 10 points. You know what I mean? That makes sense or not?
Yeah,
If you say that,
I
if
will.
we say that we are waiting for 10 points from that low, that means that we have people that bow there.
Yeah, I would more consider this as the low of that actual risk, if you remember. For example,
Yes, yes,
those who
yes.
were buying here and fading this bar, uh, their risk was the measured move of that bear bar here. So that was their initial risk. But once this bar make few tick lower and reverse, this is their actual risk. Yeah. So
They
now
move
it,
it there.
yeah. So, and because of that, this law is important, not because there were buyers who buy exactly that tick of that bar, but because there were other buyers who were buying somewhere here, and their initial risk turned out to be actual risk of that, and this is why this law is important.
Okay.
Not because of those who like buying at a tick, because if you even watch the footprint, it can be just free contract, and the others are like thousands contracts. The bears finished 2 legs, so now there is chances that bulls will now try to get 2 legs up, but for now there's trapped buyers here, and there is chances for bears to test the extreme.
Or the fill.
So that was the break even for those trapped buyers. So those who were trapped is the close of the bar, close of that bar that trapped them. Some tried to exit at break even, they failed. Others scaled in by more and managed to exit at break even.
Also the EMA.
Yeah. Now they should not let the price come back to that break even level. It's always sign of strength for bears. make one tick lower but closed inside the previous bar. The target for now is the 15 points. The bears still did not make 1-to-1, but they will likely do. Still not the test of the extreme, so it's still could go a bit lower. Okay, so though that leg failed to reach the swing target, it managed to get the second leg, and those who were not able to get their swing target were disappointed and taking profits, which led to a strong back down. Now bears are making 1-to-1 of that entry. They're still not 2-to-1. This is the bottom of the channel.
Does Albrook say something about the megaphone pattern? That is what we are seeing here now.
Expanding
Yes.
triangle.
Yeah, does he say something about that?
The expanding triangle is basically the outside, like that.
Oh, right.
On higher time frame.
Right, you're right.
Yeah, but on that example, I do not see. Maybe here.
Yes, from candle, if you want 27 or 31 to the last low.
Yeah, I don't see that something like, but
Yo,
I think it's just a channel that was broke. For example,
I mean,
here there was small.
No, I mean from 31 to the last low. Maybe it's below. I can't see it because no, it's higher. Okay.
Yeah.
Sorry, it's
So
higher.
it still did not reach the low extreme.
Okay.
But still a target because of the EMA gap.
Whoa, it was an illusion from my point of view.
So they reached 16 points, mean they can continue for 20 points here. Strong bars. So those bear bars, 5 points, and they are stronger than any bull bar. So even though that was the sign of weakness for bears, now they are going to test the extreme and they are showing very big strength. But also letting bulls to exit at break even both time, so that means they are not trapped. That will also reduce the chances for like spike down, because usually that spike down happen when bulls are trapped. For example, if instead of that there were even stronger leg that does not let them to exit at break even, then at some point at the breakout and successful follow through, they will be forced to exit without the break even stop, and that will accelerate the downtrend.
And that would be a scenario with a low probability, taking into account the open of the day, right?
Yeah, yeah. Given that that was the parabolic wedge,
Mm-hmm.
it's only 20% chance that it will continue go lower. For now, more likely, once it reaches the new extreme low, it will fail to continue, maybe fail twice, and then keep in a trending range. It also uh, the reversal time, which is bar 60. So this is probably a possible window where
The reversal
the
for the
yeah
reversal.
yeah the reversal or uh, in trend days, this is the area when the weak buyers or sellers are trapped, and in a trending range days, this is the area when the top or bottom of the range possible reversal or to test the opposite side.
What's the reason for that? Do you know?
The reason I just it was very recently on the book that I'm reading.
Okay, but
Uh,
it's something from Albrook's.
yeah, it's from Albrook's, and it's one of the topic.
Not from Rose, I mean.
No, no. So it was a chapter.
Ah, okay.
So yeah, right here. Yeah, so the key inflection time of the day, that setup, breakout, and reversal, and this is described here. That is for so the bar 60 for this time PST is the 11:30. Sometimes it happened 30 minutes earlier at 11. Uh, Other important hour is the 7 a.m., which is uh, the New York Open, because there's sometimes some news events. And yes, explaining it here. So it's very commonly on strong days to have a counter trend move that will scare people out of their position. So it's forced weak buyers or sellers to close the or scratch the trade, and then force them to chase it. Once it's clear that you were fooled by a strong counter trend move, then trend will usually continue, and you have to chase it while it going to old extreme. So what the reason for that move? Institutions benefit from the sharp counter trend spikes because it allowed them to add at a much better prices, expecting the trend to resume into the close. If you were institution who want to load up going into the close, so you wanted to get the better prices, you can manipulate the market and basically create some uh, event, some rumor to
Yeah, panic.
yeah to cause the brief panic. And so there's examples. It's a bull trend. This is the 11:30. At some point, it turned into always in short, and that led them to enter at better prices, and market end up closing on its high at the market close. Same for the bear trend. The reversal happened a bit later uh, at 30 minutes later. So there's strong free bull bars. That was the drop, and then market end up closing on its lows.
So at that time, basically, you can expect we can expect a pause of the trend and a resume after.
And not just a pause, but uh, potential reversal.
Yes,
Like
yes.
here,
That
that
I mean that with the pause. Yeah.
yeah, that was the major trend reversal. That was very strong leg down. which turned market always in short.
And it's also in line with point two. The point five was in line with point two, so they load in
Yeah,
two and they load in five.
and basically that was the double bottom, and
Mm.
at that point that was the last major lows which hold up that leg down. So basically the in if you are a swing trader, your stop probably could be here because that's the last strong leg, but the ultimate stop is here because that's the last major low and it did not broke it. And there's other example for the trend. It's very similar example to current day, but there is no big up down, just a gap down. Climactic move down, then trending range, and around that time, yeah. So it tried to it was at the top of the trending range, and at that time it reversed to the other side of the trending range. On this example, that was the also first EMA gap as well.
Amazing.
Lower prices likely, but two legs and target almost reached 20 points here, 2 to 1 of that entry. Also, this is low 2 entry, which still not reached bottom of the channel. Strong selling pressure. Another strong bar closing on its low. Has almost reached the 1 to 1 of that low 2. 4 consecutive bars, strong bodies. For now, it looks like it can get a resumption after that bear flag, which will be, if it will be a successful breakout, then the target here. For now, it still did not reach the low, the extreme low, which will likely will be reached. So it's surfed by one tick, and now there is bull bar. They reached 20 points. That get 1 to 1. Those did not get 2 to 1. This is second leg, so there is possible end of the bear trend after the gap up bar. Possible to reverse from here. For now, this is one bull bar. This is high 1, and it's not that strong bar compared to bear bars. Still not enough, but this is 2 bar reversal and failed breakout because it make one tick lower. So now if there will be more bears and it continue go lower, it will be a second attempt to break out. And if they failed again, this will be second breakout failure. It will significantly increase the chances for higher prices. Then the reversal time is very close as well. They finished 20 points, so there can be some strong profit taking, and this bar indicating the profit taking, which is because of that new low after gap up, and also because of 20 points. For now, there is more buyers above than sellers, and more buyers below than sellers. Also, there will be some bears who taking profits at that bar. For now, it broke that channel and holding below. This is 2-bar reversal. The bulls did 4 points. It's not enough. They triggered the I1. And now bulls have 2 consecutive bars. Bears managed to exit at break even. Those who shorting here scale in break even. Still holding below the channel. Now with the 3 consecutive bars, it will significantly increase chances for higher prices. Bulls close 5 points, still not enough for 10 points. This is trending range, and there is gap here, the last bar, so it can close here, and for me those are closed because of the tail. Bulls did not get 3 consecutive bars, which is some kind of failure. Those who were fading this bull bar, they will try to so those who were fading this bear bar managed to get profit. That's one of the reasons why it's that there was strong selling. Those who were fading this bull bar still did not get profit, and those who fading this bull bar took profit. Strong bear bar, much stronger compared to those bull bars. This is now possible wedge, which can develop, and this is second attempt to break out. Right now, I'm thinking that it's reasonable attempt to enter short at low 1, but bottom of the range, so it's a risk. If the next bar is bull bar, then this is double bottom, and this short need to be flattened. But for now, this is strong entry bar for short, betting that this breakout will succeed and it will reach the measured move. The trapped buyers will try to exit at break even here. There were trapped sellers who now managed to exit and bar close below that their trap level, which is a sign of strength for bears. The body itself is stronger than bull's bodies and is close below the previous bar. So for now, bears can get continuation. This is possible reversal time, which is bar 60 here. So still higher chances to get a reversal from here. For now, trying to enter for breakout with 2 to 1. And if next bar failed, then it will be opportunity for long from the bottom of the trending range. For now, there is strong selling pressure and weak pullback, which was caused by 20 points target. For now, successful breakout, very strong bar. They managed to close lower than 20 points, that means they are still holding their swing short. They closed 24 points, they reached 25, their 30 is here. And now this is second attempt to break out. That was the first attempt, it's failed. Now this is second attempt. It still can be possible failure, but for now, lower prices are likely because at the moment it's in a strong bear trend with strong bear bars and weak bull bars. Those who were fading these bull bars, they managed to get, make
Make
money.
money.
Yeah. Those who entering below that low one entry still didn't get 1-1. This is strong close. The bar closed below the previous bar on a slow. It almost reached 1-1, so there is possible profit taking, and after that there will be possible pullback to let the craft buyers to break even, and it will be the other will try to enter back at the low one entry. For now, even this is successful breakout because it get strong follow through. The bar is small, but it managed to close on slow, so it's strong follow through. For now, this is successful breakout and low price is likely, so it's reasonable to hold swing for 2-1.
And we enter in the reversal zone time.
Mm-hmm.
So maybe go to the target and
Yeah, the reversal. This is not a best name for that time window. I'm more looking at that like the cycle switch. So for example, if
yes,
it's in a range, then yeah, it's like it was bear channel and now the cycle changing to bull channel, for example, or like on this example, I'm more watching at the moment. I'm more considering this time as the time window for continuation. So it has the strong trend, then trending range, and trend resumption, which basically start at this time. So it's basically turning into new market cycle because it's still possible bottom of that range. So that this is the first breakout, this is second breakout. It still possibly can reverse, which will mean that it in a trending range and it's reversal to the top of the range, or this is the time when it will break out the trending range and now turn into the new trend.
continuation.
Yeah. So for now, lower price is likely, and it managed to close 26 points, so even more increased chances for to get 30 points. And the 40 points is a measured move of that last pulse, like basically that trending range, which is here. That's 40 points. Yeah, strong trend, strong continuation, very small pullbacks. So this is the climactic move. Maybe can some even more extreme targets are leg 1, leg 2. So the 55 points. still can be possible wedge, but for now, until it managed to break out that trending line and create a major trend reversal, the lower prices are likely. It's just strong selling pressure. Strong bars, they are closing on its low. Lower prices likely basically sell for any reason. And here they did not took profit here because it continued go lower and closed lower. Almost reached 30 points, so they're kind of profit taking. Continue to be strong, almost reached the 2 to 1. Usually at 2 to 1 there will be profit taking from that strong entry bar. It closed lower than 30 points, 31. So now they will go for 35 and 40. For now,
Well, sorry. This may be what we were talking earlier about Eddie Monster. What about to put, for example, one idea, move the stop loss to, let's say, the close of 62 or something like that. I mean, start trailing instead of taking profit where we have the take profit.
yeah, but then you will risking 5 points if you trail it. So
I don't know to where, but what I mean is uh, starting trying to change the mentality. Maybe, of course, we need a plan, right, and a strategy for that. But those we are carrying those long runners, uh, putting a take profit there. We are missing. We are going to miss those. I don't know. Just an idea of why that guy take advantage of those swing trades.
yeah, um, yeah, it's easy
I know what
on
you're
that.
doing. I follow you and I agree. But maybe a change from the strategy to don't miss those runners.
It's easy on that example because you have a very clear successful breakout of trend resumption. So it's very high probability that it will reach that measured move or even the second leg, which is here.
So I mean the concept would be okay. What can we do now in order not to miss those two next targets?
Yeah, uh, I don't know about this one because if you remove that profit taking from here, so the 40 points is here, it will most likely will get here. If you remove your profit taking here, Stam will take profit at 2 to 1 from that entry bar here.
Maybe having more contracts and let some contracts run and
Yeah,
something like that.
yeah. So this is the measured move of that renting range. Yeah, so from here to here, another measured move is the entire renting range.
Okay.
So the 40 points, for example, taking the conservative target of that
Is
measured
that
move,
one? Okay.
the left conservative is here, and the
Oh,
ultimate target is the second leg.
that is the second leg. Okay.
Yeah,
Okay.
So right now, trailing the stop, and in this example, it's not a bad idea to do something like that because you have a bars that are constantly closing on its low, that increasing the chances that there will be not profit taking, and instead you just slice it and continue.
It's not a good idea to move the stop loss.
No, I'm saying that it's reasonable to, if you have a profit taking, to maybe move it lower because of the way they are closing.
Okay.
The other way to exit at such strong trends is to wait for climactic bar. So once bears will got a strongest bar that are bigger than any
Okay.
of those, then it will be indicating the climactic end of the move. Because most of the time it will end with the biggest bar of the entire move. Yeah, and now that's the idea of the magnets here, and probably there is some higher time frames levels on 1 hour, 4 hour daily charts, and that created a vacuum effect, which now uh, can can go much lower.
What do we have on the left side? Do we have something? No.
Nothing.
Okay. Okay. Just an open gap there.
It is reasonable to take profits here at measured move of that flag, which is the low, those lows. So it now broken that lows and going to that resistance here. And that leg one, leg two, is exactly at that lows here. Yeah, a few ticks lower.
Okay.
So if the next bar is the bull bar, then the stop need to be moved above that bar because it's possible climactic wedge. So there can be strong profit taking after that. The pairs are strong. They close 31 points, so they go for 35 and probably for 40.
Okay. Whew.
There was some profit taking because of that weak of the tail. It closed outside that profit taking zone, so that indicating for lower prices, and it keep closing on its low almost every bar. This is a very strong trend. 34 points, so they almost reached 35. Still can go for 40 points. A bit decreasing sizes compared to those two, but still
Yes,
very,
slowing down.
very
Yes.
strong. So this is possibly climactic bar. I think this is the strongest. It's 5.
Where did we take profit?
At the minimum target here. So this bar look like climactic. It's the same size as this bar. So now with such a big bar, it significantly increased the chances for reversal for profit taking. And now once it reached the target, it reached the 40 points. Yeah, so exactly 40. Now, if the next bar is bull bar, then it will be a very good long because it's climactic, and strong bull inside bar is a good entry. So with your strategy, managed to get 6 points more. The bar itself is weak. It's small body, big tails.
Yeah, profit taking.
Yeah, but it's still possible reversal. Now, for bears to continue, they need to close below the 41. For now, it's holding, and bulls need to close 6 points to go for 10. This is 66. So this is uh, so the bar 60 is 5 hour, and 66 is the half hour.
Hmm.
Inside bar, let's make it mother bar. It's a good entry, low one for short. The only issue is that they did not manage to close 41. So this is possible trap for bulls or for bears. If this bar will not get continuation and did not manage to close outside the trap zone and 41 points, then it will increase chances for reversal for bulls. Good entry bar. It's stronger than the bull bar, closing on its low. Yeah, I'm not sure about that entry. Probably. This bar is. I think it's not look like it that climactic, so it still can go lower. But for now, they better to close 41 points and outside the trap zone. They will probably try to enter here and get their 1-1, or they can be bulls who fading this bar and will get profit here.
If we could have a more wide or systematic thinking, what I mean with that is a better overview, uh, because in this case we took profit instead of let it run, but now we are entering again. So I would like to, I will think this later, in a better way, maybe with the
It's
what
this.
happened if instead of taking profit in the last trade, if we let it run and risk, let's say to the high of the 65.
It's described on the Albrook's I think even the video course and in the books, he called it 2 bars to leg, 10 bars to leg.
Yes.
So the idea is that once the on this example the bear side finish their swing trade, like here maybe on at some targets after the strong trend, some 40 points, yeah, and they taking profit, that mean there is a strong bull bar, yes, a strong profit taking at the magnet at the important level, like 40 points, like those measured moves.
Mm-hmm.
That mean they those swing traders, those big swing traders, they are taking profit here, yeah, exiting their shorts. Now they will not enter it back because they just exited. Now they want higher prices to consider another short or wait for more information. Uh, and that's the idea of 10 bars to legs. So if this is strong profit taking, which it not at the moment, uh, if it's strong profit taking, then you can expect uh, 10 bars, at least 10 bars, and two legs, like one, like two, before you consider another short. But since there is no strong profit taking, it still can it still can indicate that they did not took profit here and they're still holding, so they can go lower, and that can be your criteria to enter back where you take profit and continue holding it.
Because we have that magnet of the second leg from that 55 points. Yeah.
Yeah, maybe.
Okay.
This is risky. If the next bar is some kind of bull bar or some trap, then I better to exit and wait. For now, I'm betting that this is continuation of that strong breakout trend where to continue print strong bear bars. So the next bar need to manage close 41 points and below the previous bull bar and below the
Perfect.
outside the trap zone. If it's bull, then it's some type of double bottom on lower time frame and better to exit. If it's big, strong bull bar, then my stop is above that inside bar. But that inside bar is stronger than this bull bar, so for now this 2 bar reversal and the bear bar closed on slow. The only issue is that this is bear trap zone from that mother bar, and bears did not post 41 points.
Yeah, another. This is not minor. What I'm going to say at this point in time for the day, bar almost 70. I would be tired to make decisions there.
Uh, it's it
The
mentioned
end of the
it
day.
it mentioned by many lecturers and by Albrook, the the you can divide market by 3 sections, which is the beginning of the market, so the opening market, then middle of the market, and end of the market. And usually market have like 3 different stages, 3 different phases. Not always, but very often. So you have the market opening where you have some expectation for first 2 hours, and usually the first 2 hours is more volatile and providing the swing entries. Then the middle of the day you have like here the overlapping trading range environment or less active participation. And then you have the third window is the end of the day, where it basically provided another swing opportunity like it did at the beginning of the day. So, for example, you could when you fully developed and like you know what you're doing, you can do maybe the first 2 hour, then take a break and do the last 2 hour or the 3 hour of the market, and basically skip the middle of the day.
And what are you actually doing?
Second,
What are you usually doing?
I sit through the mostly the entire day, but yeah, from bar one to almost maybe I usually skip the first 12 bars of the opening because I want to see some patterns before I start. And very often I'm very tired at bar 70, but I still try to sit till the end because there is it called uh, last hour close, or I forget how they call it, but basically bar 70 market very often create some strong move up or move down to
Have you?
that
That I think
completely.
that that is part of the bonus material, right? Have you watched that?
Yeah, maybe. Yeah.
Okay.
Yeah, and it's the same as for the 5 minutes candle. It's very often you have a candle. It look very strong for the last 3 4 minutes, and last 20 30 seconds or even 5 seconds it completely changed it and reversing. Yeah, and at the end of the candle you now have completely different candle what you were expecting, because
Okay.
it much more for those who manipulating the market, or those who want to make the candle closed the way they want. The easiest way for them to do this is at the end, before the candle close. Yeah, because at the beginning, if they manipulate it, it still can recover until they for the next 4 minutes until the bar is closed. But when you do it um, at the very end, then you can quickly change it, do some sort of surprise the others, and close the way you want it. And the same idea for the daily chart. Some big institutions, they want to close the chart specific way. They want to create some specific patterns. They're waiting till the very end, and basically at the last hour they are starting their selling or buying program to close the bar as they want, because it's
Perfect.
the easiest time. So now they managed to close outside the trap zone and 43 points, so they can continue go lower. Strong pair bar. And the another reason to enter at low one here was because it's in very steep channel uh, from here to that height, and it was still holding. Uh,
Yes.
so you can see this as the channel, and that was the top of the channel. You're basically betting that it will go for bottom of the channel. And this is bar 68. It's a breakout, so the next bar need to be bear bar. if this is bull bar, then this is failed breakout of that, and this will increase the chances for bulls. But for now, strong bears, they closed outside the trap zone, and the target is 61.8. 1 to 1 of that low one is here, 45 points is here. The ultimate target is second leg here. For now, my profit taking is 2 to 1 of that inside bar. This look like climactic, but again, not that strong bar. 7 points. Still can go lower. But now it has the big tails. So
Yeah, there
yeah,
are people taking profit there.
yeah. Before it was closing on its lows constantly. Now there is tail and there's even bigger.
And in this huge move, it makes sense to have a lot of people front running that.
Yeah, yeah. It's even better maybe to move one tick higher of that 2 to 1 because there definitely will
But
be a profit taking of that inside bar.
but again, why move the take profit instead of move the stop loss and trail? Why not trail?
Because now if you trail, you basically uh, you you want to increase your profit taking by that, and you're increasing your risk by that. If this is your there will be your stop, this is your profit taking, then it's not proportional, so it's like 3 to 1, 2 to 1. You could say that maybe you take profit lowers, but I will be surprised if it's continue to go as ultimate target. There will be end point of that second leg. Yeah, I'm just saying that it's too risky to uh, unreasonable to risk just for 3 points to get 3 points more. Yeah, better to exit at 2 to 1 of that
But
low.
in that case, I will move the stop loss to the close of that 69 candle or something like that. I don't know. Maybe there.
It can we move to scratch? Yeah.
No, I mean instead of putting a limiting the profits, I will run from the back with the trailing stop. Maybe to the
Yeah,
no,
but
not there.
y-
No,
where
there, no, but maybe there to the
there?
close of the yeah or below there.
Yeah, but then you will be stopped. You will be basically stopped at 1 to 1 when you can get 2 to 1. Uh, 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 it's very likely that there will be big pullbacks like this bar, so you will be stopped
Okay.
before you reach the target. It closed 47. It already reached 50 points.
Oof, that is why too. Yes.
Yeah. Still can try to get that second leg. Still can continue. Uh, the bars are increasing in size, so it's very climactic, but I think for climax bar it needs to be even bigger. Yeah, something like that.
Mm-hmm. Mm-hmm.
Bar 7, I forget the what exactly time is the like the final hour reversal. but this is possible window when it can very strongly reverse to the side.
Maybe in line with my idea, what about to put where you have the take profit? Is there something like to convert that to stop limit or something? In Binance, we call it stop limit. It's something like, okay, once the price reach that level, instead of take profit, it activates a trailing stop from there. That is what I am thinking about. Okay, don't move the stop loss in order to stop you out. You are right, but instead of taking profit at this level, something that led you to continue in the game,
Mm-hmm.
a kind of order. You say, okay, you limit you once it's reached. Do you get the idea?
Yeah,
Am I explaining well?
yeah. Uh,
I'm still thinking on that about Eddie Monster that let it run, and I want to be covered too. So both things. Maybe something is possible to do about that.
yeah, he let it run, but he do not let it run indefinitely. He have a profit taking, and for example, he will always take a profit at leg one, leg two. Like
Okay,
this is
okay,
his mantra. He
okay.
never ever skip it. So if you watch his
It's fair. It's
last,
fair.
he was posting some new thing. For example, his last chart here. Uh, but this is Friday, and it was small pullback bull trend. Was not the best example. Yeah, it will be hard to find.
But if we use the search,
Well, last time it did not work.
yeah, you're right. When you put it from,
Still not working.
okay, it doesn't matter. I got the idea.
Yeah. Well, and on those examples, he showed me that he entered here uh, and took profit here of that trade. Then enter again, exited, enter again, took profit here, enter again, and exited. Usually he holds a runner when he have uh, something obvious like that. When you have that like one, then trending range and successful breakout, then your target is the second leg of the projection of that first leg, and he will take profits here.
How many points do we have so far from the last entry?
8.
8. Okay.
I'm trying to get the 11. Still lower prices likely. They get 1-to-1 inside bar, and now it closed outside that 1-to-1 level, so it can try to get 2-to-1. Yeah, but now 50 points. They reach the important target. Could be a possible reversal. So they need to close 51 points then. And now big tails, which is kind of weakness. Now inside bar. So with that inside bar, I would probably try to exit at that drop zone. This is doji bar, so this is not a good sell for bears, bad buy for bulls, and this is sell for bears and bad buy for bulls. Probably at this point even better to just flood trade and exit at market.
Yes. Because you are
Yeah,
we are risking more what we made so far in the last trade. So it's
yeah, probably given this is the we'll exit at close of that bar. So now this possible drop for bears 2-1 still can be reached. Try to be reached. Possible climax. Ultimate target is still here. Need to close outside the trap zone. Still holding the that very steep channel.
okay. So we can also risk. Sorry that I insist. We can risk another point instead of taking profit and say, okay, let's move the stop loss to the open of that candle. We will risk 1 point, waiting for having maybe 5 more points. That the risk to reward is better instead of getting out.
To have a stop here.
No, on the open of that candle.
On that.
There. Instead of getting out now, they open there, because we assume that we get out, so we are out. We don't have the possibility to take advantage of the situation, right? So we say, okay, we are still in the channel, but we don't want to risk too much, so we are going to get out. Okay, but instead of that, we can say we are we will risk 1 more point, but we're still in the game if in case that the price continue lower.
Yeah, betting for
5 more points, something like that.
For trend bar. Yeah, but now this is trending range on lower time frame and more likely.
Yes, choppy. Yes. I will remove the take profit there, or move it lower to the 55.
I want to exit at the trap zone. For now, I'm expecting this to hold and to chop out. Because this is 50 points and now the drop. It's very close to the ultimate target and not that much time left, so it can start to reverse and those will be disappointed. Yeah, I don't know. That gap is still open here.
Mm-hmm.
So it's first triggered here before it go lower. Now there is dropped sellers. Another doji bar, still holding the tight channel. They still did not reach 2-1 by 2 ticks. Can be possible reversal. Nope.
Ah, motherfucker.
So now it's reached the ultimate target, 55 points. Climactic. There were, yeah, it's his biggest bar. It's the biggest bar since those since that printing range started.
There is a human tendency to not let it run. that is for sure something. That is why I was insisting on doing something to let it run.
Mm-hmm.
We need to find a this is super cool. We need to find a strategy to put that in practice. Something I don't know if it's trailing or whatever, but something that allow us to let it run because we are missing those swing. It's not the case because we let it run till 50 points, but uh, I believe you know what I mean.
Yeah, in this example, you could say that it's in micro channel because from here it never make higher high,
Yeah,
so it
something
was
like that. I
always
don't know
lower
what,
low.
but
Yeah, but because at that point, if you uh, trail here, this is very high chances to be swept because to drop some buyers here or to force someone to exit. So this is bad stock placement. It's good for profit taking, maybe alright, but it's very bad entry par for long. But if you exiting short, it's the same as the long, basically.
what I mean, we have I mean, human the tendency of a scalper, right? It's like no, get out, get out, get out. We need to manage that.
Yeah, Eddie Monster can teach that.
Uh-huh.
So now it's reached the target, and I can't see any trades to take. It
No,
closed out
fantastic. Well, it was a fantastic day. I don't know what's the PNL for today, but
closed outside the drop zone and
mhm.
already reached the target. It broke that very steep channel and enters back, reached the target, uh, managed to close 54 points, so we can try to get 60 points, but now this is the
Second
biggest,
leg. Mm.
yeah, this is the ultimate target and this is the biggest leg. So there should be some buyers, there should be profit taking. Bar 72 is the 6 hour lows.
I am thinking you said something that triggered something in my brain. Uh, Maybe something that an script that shows the biggest candle of the day, the and the second one is going to help. Now we are at the end of the session, right? But something that it shows you the biggest candle of the day, maybe give us a dot about above the biggest candle, something that show us that that one is the biggest one, or and the second one.
Yeah, I think you don't need a script for that. With experience, you are always expecting the uh, climactic bar to
No,
end
the
the
problem is
low.
that we forget to look at that. That is the idea of the script, that to remind you that okay, this is the biggest one.
Mhm.
Yeah, I know that you already have the concept in your head, but too much things maybe. No, just an idea.
Yeah, so for now, just waiting because uh, possible profit taking parry and
Second
bet,
leg, yes.
bet short. Uh, but still lower prices for now with that strong close, lower prices likely. But the strongest bar can give a reversal. So there's other target which is 2 to 1s of that measured move of that trending range. So can we consider those two? And 60 points because it closed 55. If it's even bigger bar. Yeah, so this is probably as big as the beginning. So the body was 10 points, still 11. Yeah, but now this is climactic bars if you compare to that move. So this is the end somewhere here. And this is, yeah, almost session ending.
And they
Risk,
reach the look. They reach the target for that mother bar.
yeah, 2 to 1.
Mm-hmm.
64 points. Can try to get 70. Now reach 70 and possibly reversal with huge bar. 11 points. Close. Small body, but uh, after that climactic, so it's either the trending range or channel, less likely another strong pair bars like that. The bulls closed 9 points, the bears finished 70 points, and for bulls not enough to continue, so there's probably still sellers above, but also the profit taking for that swing trade. I'm thinking why they are ignored that uh, leg one, leg two. 55.
So this is a super low probability day, right?
Yeah. The itself it's only 20% of people continue. And now
Mm-hmm.
uh, that it ignoring that. So the fact that it ignored that profit taking, uh, it can continue go lower, but now these climactic bars, they should stop
For
more.
for those higher time frame players, what do we have here?
It swept
Mm.
the lows, so those the low, that low. Yeah.
Okay.
They need to close 71 points to continue. That strong pine bar, small body is so weak. A much stronger bear bar compared to bull bar. So now it can be spike in channel. So they get so they get pullback for 11 points, and now bears close 7 points. They have already reached 10 points. So they need to close at its low to continue for 20 points. Still did not manage to close 10 points on E9, reached 15 points. Now it's spiking channel. This possible second breakout. This is the first breakout. This is a second breakout. And for now, it's possible second failure.
I am aware of that we are trading in 5 minutes, but another stuff I remember from uh, these higher time frame players or different time frame players is that maybe at these levels we have those hedge fund managers or something like that, that they have positions from the, because we are, no, we are 14. Okay, I thought we were at the September 24. It was 14, because those that invest at the beginning of the month, I mean 2 weeks before, in a higher time frame, maybe they have positions at these levels, and that is what is as we don't have reference from previous days at these levels, maybe it's a good idea to look. I think that is something similar to what Brad does at the beginning when he looked at the higher time at the daily chart, because he I watched or read something uh, about that higher time frames. Most when you don't have a, even more when you don't have a reference to the left in a lower time frame.
Yeah, as I said yesterday, the hard time frame can help you to uh, identify some levels, but you should be able to see that on 5 minute chart how the price action
Yes, I
on
remember.
all
Yeah, yeah,
those
yeah.
levels. Yeah. And for example, when Brad do the like daily chart, his main focus is on the last bars, and those last bars are helping to expect uh, have expectation for today how the price will act. People watch the chart and people say that this is the climactic, this is the climax and the possible the second failure. So
Only in
the
5 minutes.
no, for example, if you watch the daily chart, so
Ah, okay. Oh,
he
sorry.
will expect that today will be uh, more sellers above. So once the market will make new high, he will expect it to fail and go back, and below is bad sell. So if the market will go below, we will expect that it will fail and maybe stay here, for example. Still cannot close lower than 70 points and possible second breakout. So if the next bar is bull, then this is second breakout failure. Now big tails after the climactic move. So it's spiking channel. At some point, the spiking channel, the beginning of the channel can be tested here.
Mm-hmm.
The strong bull bar, so this is confirming the second failure. And now this is either the spiking channel or trending range. This is the target for the bulls. Bears failed to close 70 points. Bulls did 13 points, or already reached 15 points, and 20 points is here. Still low probability for bulls, higher probability for bears. There will be still more sellers than buyers, even though the bull bar is strong, or there also can be profit taken from that uh, strong bar and exiting their shorts. For now, bulls should not get 1-to-1, and some will fade this bar to take profit here. I'm not sure if this is the the 40% and this is 60%, because this bar can trigger the sellers
Yes.
to exit and accelerate, given how climactic this move was. So it's not the best like scalp, but it's still possible that they still the with the beginning of the channel and possible trending range, still holding that deep trending line. And even though this is bull bar for buying, it still there's probably still not that much buyers and more sellers, because buyers it was in a micro channel for a long time. Yet this is the first time it left the micro channel from that bar. So the it mentioned on a video course in a books, once that micro channel is broke, the first breakout will be faded, and Now bulls need basically high 2 from this high 1, they need high 2. Yeah, so some of them faded, still did not manage to get profit.
A little bit more of confusion.
Yeah, the trending range. Tested at the beginning of the channel, break out that micro channel. Now they possibly can get second bar to enter, but there is no much left time left.
78, yeah.
Yeah, most likely it will end up ranging here till the
Yes.
close.
Yes.
Those who fade that bull bar, they will try to take profit below that bar. Their stop is here. Also, those who were fading this bear bar, they managed to get profit. So this is leg 1 pullback, this is second leg. So now it's more likely they will manage to take out that high. Those who fading, their stop is here still, and those who were entering on Stovo with that bar, they will try to take profit here. This is inside bar. Now they closed 18 points, but they already reached 20 points. For now, this is trap zone above, so I think there's still more sellers than buyers here. But strong bull bar closing on its high inside bar. Leg 1, leg 2 need a bit higher.
Yeah, closing everything.
Yeah. Triggered one tick buy and possibly trapped the buyers. This is from first book. It's called the small entry bar, and those bar are good entry bars because they providing you a small risk with big reward. But in this example, we try to take profit from here with a trigger. There's only few bars left. Either it will
Only one.
Yeah. So I will betting for strong bar to close, because the bulls get strong bull bar and weak follow through, strong second bar and weak follow through. So in some way this is leg 1, leg 2, and now they can disappointing try to exit before the session ended. So this is bar 81 and there is no 82, then exit.
Do you have a clear idea at what time it changed from in AM in your case in the Apex? At what time it changed from daily margin to intraday?
I use the Albrooks to 81 bars. I'm not sure by exactly 81.
You should check it because I read that different brokers maybe 15 minutes more or less. I'm not sure, but I believe that with 81 bars you are covered, but you are on the safe side. But it should be good to read about it, so you don't broke a rule. I don't know if they have a rule about that.
Yeah, I think they have. So I think it for Lilo it's even more. It's like 90 bars or 100 bars.
Yes,
Uh,
yes, that is what I mean. Yes.
yeah, I don't remember the exact time, but uh, once the bar closed, I think my time is about 10 or 11 p.m. Uh, but Lilu will require to close your trades until 12 p.m. my time. So I still have like 30 or 1 hour
Perfect.
before it's end.
Whoa, what a nice session, huh?
Yeah, it was a bit tough here at the beginning. Um, so there was at the beginning, uh, yeah, it was very volatile, a bit complicated. Then that was easy. That one on that trending range, the main mistake was to have a tight stop, and it basically chopped out here with that stop, chopped out here, so entering here, and it chopped out here. Uh,
We don't have to trade the fucking ranges.
what?
We don't have to trade
Yeah,
range.
and yeah, you need the other rules for training. As I said, when you trade the training range, you need to have your stop uh,
Yes,
much higher
yes.
compared to what you expect to take, and you're basically betting that the breakout of that trending range at that point it was here. You're betting that this will fail and not reach the one-to-one of that trending range, which is here. Yeah, it failed, and then go to the opposite side. And you need to be comfortable with scaling in, because
Yes, yes.
if you have that trending range and you are buying, you're buying more, and you need to be okay to scale in if it's failed. So instead of to exit here, you need to even buy even more and betting that it will not go one-to-one of that trending range of that range to here, and basically
Yeah, but
you're
I
selling at the
can
top.
I cannot agree more with you with the first message of the day today. That look at this guy, that he looked for swing trades. I think that it related to the stress that you can have scalping versus the swing trades. There's not too much to think about that.
Mhm.
So so how did we finish in the with the PNL? Oh,
39.
beautiful,
Yeah, but it's all thankful to that big trade, that big trade here.
beautiful,
This one
beautiful.
single trade did 20 points, 17. Uh, a bit surprise was here with that strong bear bar and finished 2 legs, and strong entry bar which failed. And you can see it's after that it's started to be very overlapping and very weird.
Does Brad usually make reference to the encyclopedia or not?
Yeah, they all usually trying to refer to basically like promotion, like
Okay.
like to force people to buy it. So they
Mm.
try to use it, and he's showing some examples. Al Brooks, when he streaming, he showing that